Doesn't matter. Like, predicting the future is a tough game, very tough game. So nobody really knows what's going to happen. But I just think if you look at what has happened to gold in the last 12 months, there's no reason why it's going to change. You know, gold's done so well for all the wrong reasons. It's supposed to go down. It went up with a stronger dollar. Well, today, the dollar weakened. Gold went up.
Gold saw impressive gains in 2024, surging over 25% to reach a new all-time high. This continues a strong 5-year trend, during which the metal's price has risen by more than 70%. Research from Goldman Sachs indicates that gold could surpass $3,000 per troy ounce by the end of 2025. JPMorgan shares this bullish outlook, citing policy uncertainty and geopolitical risks as key drivers, with its forecast also aligning with Goldman Sachs's $3,000 target. Well-known mining industry figure Ross Beaty shares his outlook on gold and silver for 2025, stating that it's not difficult to be bullish on gold right now. However, as a lifetime contrarian, he acknowledges some concern, as widespread optimism about gold has become the prevailing sentiment. However, he believes that, given gold's strong performance over the past year, there's little reason for a significant shift. Central bank purchases, led by China, continue to bolster precious metals, with this institutional demand likely to persist until gold approaches $3,000. Globally, central banks have been increasing their gold reserves to diversify assets and reduce dependence on the US dollar. In recent years, they have collectively acquired over 1,000 tons of gold annually, with China among the most active buyers. Meanwhile, physical demand from key markets like India and China remains a significant price driver. In India, 60 to 70% of gold demand comes from the jewelry sector, highlighting its cultural significance as adornment and a status symbol. Ross Beaty highlighted a shift from the US dollar as a key driver of gold's strength. He noted that beyond central banks, retail investors in China, India, and Vietnam are buying gold at record levels to protect against currency declines. Looking ahead, Beaty remains optimistic, stating, "Every factor that supported gold last year is still in place, so I see no reason for a decline. I expect another strong performance." Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
You know, Charlotte, it's not hard to be bullish on gold. In fact, that's probably for me as a contrarian, as a lifetime contrarian, I'm most worried because everybody's bullish on gold right now. You know, you go through every single mining analyst, the real smart guys in the sector, smart people in the sector, in the investment world, and they're all forecasting higher prices. The gold market is an odd one in the last few years, really ever since the Russian invasion of Ukraine, because for various reasons, but especially because certain countries wanted to get off the US dollar as their functional reserve currency, central banks have been buying gold. And this is really unprecedented in my lifetime. In fact, in the 90s, most central banks were selling gold. Bank of England sold out of its gold. Canada sold out of all of its gold. But of late, a lot of countries have wanted to reposition their holdings of reserve assets. And so, led by China, but by no means only China. China bought 700 tons of gold last year. That's you have to multiply 70 times 30, and that's an awful lot of gold. And then it wasn't just China. It was India, Uzbekistan, Poland, Turkey. You know, you could just name a whole bunch of countries that bought gold as an alternative currency asset, which demonstrates gold's long-term abiding store of value. And a lot of retail investors in China and India and Vietnam bought more gold than they've ever bought before, as an offset to concerns that their own currencies were potentially going to decline, and that's exactly what they did. So you had all of these new buyers of very large amounts buying gold in an environment when the dollar was strong and it got stronger. Yields went up, not down. Of course, quantitative easing was ending and quantitative tightening was going to begin again. Inflation was reasonably high. It was coming down, but it was still pretty high. A whole bunch of factors that are typically very negative for gold. And that's why a lot of the smart money in New York and Toronto did not buy gold. You saw last year, new money into ETFs went down. Actually, more money was pulled out of the U.S. ETFs than was put in. So very bearish from the sort of classical investor side, and yet the gold price went bananas. It was the best year in gold in, I don't know, maybe my whole lifetime. Maybe, I mean, as a proportion of what it started out, it went up 27%. So it was a really great year. And I'm not surprised at that. I was very broadly forecasting higher gold prices last year. But I didn't expect to do so well. So today, I mean, who cares what happened last year? What's going to happen this year, right? And I mean, Yogi Berra said it right. He said, the trouble with prediction is, you have to deal with the future. So it's never simple. But I really have to say, to sum up my own views, I don't see why gold would go down this year. Every factor that is influencing gold in the last 12 months is still at play. So I really do expect gold to have another pretty good year.
Silver tests the critical $30.54 pivot while gold hovers near all-time highs, underscoring a divergence in precious metals performance. A key factor driving silver's anticipated surge is the sharp rise in industrial demand, particularly from the renewable energy and technology sectors. Silver's exceptional conductivity and reflectivity make it essential for solar panels, electric vehicles, EVs, and various electronic devices. In the past year, the global solar panel market grew by over 20%, significantly increasing silver consumption. Ross Beaty expects silver to perform strongly, emphasizing its dual role as a precious metal and an industrial commodity. With significant demand for renewable energy and electric vehicles, he believes that if gold performs well and the global economy remains stable, silver could even outperform gold in 2025. Now let's redirect our attention to a video.
Takes long. It's a big mine. There's a lot of things that, valves that leak and gaskets that blow and pumps that fail. All that stuff that happens in a big mine startup like that. So that's kind of happened. And it's typical stuff, and it was all budgeted. But at the end of the day, for us, it's doing some really transformative things. Equinox pre-Greenstone had 4 mines in Brazil, a mine in Mexico that was having some challenges with local communities, and a mine in California. Growth everywhere, but the last 3.5 years have been focused on building Greenstone, and it's now built and running. So a year ago, there was a lot of, quite frankly, concern by people. Were we going to hit budget? Were we going to hit schedule? Because if we didn't do both, it was a serious risk factor, and it could have blown us up. Well, we hit budget, we hit schedule. But a week before we opened the mine up in May, our partner, 40% partner, Orion, told us they wanted to sell their stake. They're a finance company. They're not a mining company. So we had to raise $1 billion to buy them out. We did that in mid-May. Well, that added debt, and it added more equity, and nobody likes that, but the result was we got 100% of the mine that we previously owned 60% of. So in the process of building the mine, a lot of time, a lot of, you could say, technical risk, that's done now. Financing risk, that's done. We have a lot of debt. We have about $1.3 billion in debt that we've accumulated to buy all these and build all these mines. And this year, since the mine is built, it's given us 50% of our asset base in Canada, best jurisdiction in the world for mining, a real tier 1 deposit, tier 1 country, and by far the lowest cost of all of our mines. So it's going to bring all of our costs down corporately, deliver a huge amount of free cash flow, which we're going to use now to pay down the debt. That's a really transformative time for us. Much lower risk this year. I'm predicting a pretty darn good year this year for Equinox. We've got growth in other assets. We're hoping to finalize our community issues down in Mexico this next couple of quarters. We're right in the middle of that right now. And great team of people, and just really, I really feel we're hitting our targets. We've aimed at producing 1 million ounces a year, and we're very close. We'll be very close to that after Greenstone gets up and running fully.
Yeah, I'm going to come back to that 1 million ounces. I have kind of an emotional question about that process of getting Greenstone up and running. You mentioned there's people who are doubting, is it going to go right? How did you feel? You've done this before. Were you feeling good?
There's a lot of armchair quarterbacks in this world, and sometimes they're right and sometimes they're wrong. But when you own something, and you can't just be like a stock owner, an investor.
The outlook for gold and silver in 2025 remains highly bullish, driven by substantial central bank purchases, growing investor demand, and rising industrial usage. Ross Beaty emphasizes that gold's strength is underpinned by continued distrust in the U.S. dollar, while silver's dual role as a precious and industrial metal positions it for potential outperformance. With major financial institutions projecting gold prices exceeding $3,000 per ounce and silver, benefiting from surging demand in renewable energy and technology, both metals are set for another strong year. However, market dynamics remain complex and unforeseen economic or geopolitical developments could introduce volatility. Will gold surpass $3,000 per ounce? Could silver outperform gold in 2025? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.